Well, the Federal Reserve got another piece of economic data today that shows a mixed bag for the U.S. economy, and equity markets have cheered that along with bond prices. It is Wednesday, December the 4th, and this morning we received the ISM Services Index, and this measures the activity in the service side of our economy, which is very important because that's where U.S. Consumers spend the majority of their money. And it's also where we've seen inflation be a bit trickier for the Fed to be able to control. So let's dig into what we received in this data report today. So from the broad composite index, the ISM Services Index, it showed that it continues to be in expansion territory, meaning a reading above 50. It's been in expansion territory for the past 5 consecutive months. But we did see the biggest drop that we've seen since June in the month of November, and it went from a 56.0 to a 52.1. And to put that 52.1 in perspective, when Bloomberg surveys all the different analysts for their expectation for economic data, this was below even the lowest expectation for this reading today. Now, all of the components in this, the majority of them all saw a weakness. The biggest weakness was in the inventory change, but we also saw broad business activity decline. We saw export orders, employment, new orders, all of these declined, which shows that the service side of the economy is slowing. Now, why this is a mixed bag for the Federal Reserve is because it is showing a slowing economic environment, but it's also showing the prices paid component was one of 3 of the underlying indicators that actually increased, and that's that inflation component that the Fed has had trouble controlling on that service side of the economy. So we don't think this make any changes to what the Fed will do in December. We still have a lot of data before they meet in December. We'll get the jobs report this week. We'll still have another CPI report for the Fed to digest. At this point, we're just kind of wait and see what the rest of the data shows. We think the Fed will still cut interest rates by 25 basis points in December, but I think the outlook for 2025 is much more unclear. This inflation continues to be very stubborn, and the Fed's walking that very fine line of being able to control inflation while also bringing interest rates down, while the economy is still producing positive growth. That's all we have today. We'll be back this week. As I mentioned, the much-awaited jobs report will be delivered on Friday. So we'll be back with some more economic data and what that means for the markets. Thank you. And if you like this podcast, please subscribe, hit the alarm bell. Please share it with friends, family, or colleagues. And if you'd like a longer history of our podcast, you can go to marketswithmegan.fm. Thank you.